All right. Happy holidays, everybody, and thank you for being with us here today as we're trying to run down 2018 and get started and look forward to a prosperous 2019. So first of all, we'd like to wish all of you a happy holidays and a happy new year. For those of you who don't know me, my name is Steve Ehrlich, and I am the Chief Operating Officer here at Wall Street Blockchain Alliance. And I'm very pleased today to be joined by Dr. Stein, who is a key member of our Accounting Solutions Working Group. Thanks for being here, Sean.
Happy to be here, Steve. Thank you.
Thanks. So this is going to really be the first and what's going to be a series of regular webinars and podcasts discussing accounting and its relevancy for blockchain and vice versa, because this is a really uncharted territory, and it's very interesting. But before we get into all that, Sean, would you like to just introduce yourself briefly for our listeners that may not know you personally?
Absolutely, Steve. So I'm Sean Stein. I'm on the faculty at Lehman College in NYC. I'm a member of the advisory board of the Wall Street Blockchain Alliance, and on top of that, I've done quite a bit of work with the AICPA, building out their actual blockchain courses and educational content. I do a lot of media talking on blockchain, Bitcoin, and the whole sort of crypto asset space as it's going to impact corporate finance and corporate accounting now and going forward.
Sure. And Sean, I believe you just had a book published as well. Do you want to talk about that?
Oh, sure thing. Yeah. So the actual book that I had published, it actually focused on integrated financial reporting, and so the whole point of that is really how people working in finance and in accounting really is going to harness these tools like blockchain, like AI, like RPA, and automation at large to help companies, one, have a better handle on how they're doing from an operational and a bottom line basis, and also do so in a manner that is actually forward looking.
Okay, great. And I think that's a really great segue as to why we're having you for this discussion, because your ability to basically speak the language of the accounting space, but also several emerging technologies beyond just blockchain. So just to kick things off, why don't you first, just a very basic question, why should accountants care so much about blockchain, and how does blockchain compare to other types of innovations that have impacted the space over the last 20 or 30 years?
Absolutely. So really sort of a key question that I'm asked quite a bit is, okay, fine, Sean, all of this blockchain stuff sounds great and interesting, but how is it different than other computer systems and tools that are already being used? And really, it is different in a handful of ways, and those handful of differences make it very important. One, it's a decentralized way of storing and transmitting information, which is totally different than any other accounting system out there, right? Because the whole accounting process, be it audit, be it advisory, be it corporate taxation, is basically having external people, us, as CPAs, come in to help companies verify and validate and value their records and their information. And a core piece of that is actually comparing the books of the company to some external documentation, right? Be it a bank statement, be it a joint venture agreement, or all the rest. So it's a decentralized way of actually handling that information. So it's totally different in that sense. And then two, the other aspect of it that really, really makes it pop out and be important is that combination, right? Because at the core of any blockchain is encryption, right? And so that sort of data integrity lies at the core of this entire ecosystem versus, current software offerings, be they SAP, Oracle, Hyperion, Xero, QuickBooks Online, any of those, right? Those have features to help safeguard data, obviously, but all of those are added at the edge, as opposed to blockchain having that at the core of the idea. And then sort of building on that, this concept of it being a permanent record, of being immutable in nature, once blocks have been added is a big difference. And really from an audit or a attestation point of view, that basically means that any changes made to the records or the information stored on a blockchain are much easier to find and uncover than to track. So, I mean, it's a big game changer, Steve, for every aspect of accounting, but especially for the audit and the attestation side.
Okay, great. And what are some of the top issues that you're seeing right now in the accounting space as it pertains to crypto and blockchain? And what are some of the main stories or threads that you're following?
I'd say really there are a handful of those main themes right now. One is the educational aspect, right? Everybody at this point has heard of blockchain, has heard of Bitcoin, but there still is out in the marketplace a gap. But between hearing of it and then truly understanding how it works and the implications of these tools for everybody working in accounting. The other top story, point two, is how to actually use these technologies and platforms, right? Because at the big four and probably at the top 25 firms in the accounting space, firms are already offering advisory services and audit services built around blockchain. But outside of those firms and in the marketplace at large, there is still a question as to how to actually use these tools, both on a standalone basis and then how to actually weave it into current ERP options out there. And then the third top story or the top theme that I'm seeing is how to actually value and treat and classify different types of cryptocurrencies, be they Bitcoin, Ether, XRP, any of them. How to value them, report them, and then how to create sort of a audit trail around these assets is also a top issue right now.
Okay, that's good to know. And just to follow on that line of conversation a little bit further, most people that are listening to this are already well-versed in the key tenets of blockchain technology, and they also understand that with all of the positive benefits that come with an immutable ledger of record, there's also trade-offs and challenges that need to be understood and addressed. So I mean, for instance, the immutable ledger is a great thing as long as all the data that gets entered into it is correct.
Yeah.
What are some of the key challenges or hurdles that really need to be overcome for this technology to be widely used in the accounting space?
Mm-hmm. So probably the top couple obstacles or challenges is the top one is that it's still very costly to implement inside of a organization, right? Whether it's inside the firm or if you are offering advice to your external clients that actually onboard it, it's not always easy or cheap to actually do so. And so on top of the costs that are involved in obviously coding, programming, maintaining, and then integrating blockchain-based options to the current ERP systems, all of those other ERPs are going to have to keep up and running for now. So I'd say cost is a big factor. Two is that folks out there working as CPAs, be they in private industry or at a public firm, don't have the knowledge yet to really be able to see and to track and to really make sure that the internal controls around the information going onto the blockchain are actually up to par. So to echo on your earlier point right there, a immutable record is fantastic if all of that data is actually accurate. Now, as anybody who has ever worked in any accounting role ever can tell you, I mean, that isn't always the actual case, right? There are always entries and pieces of data that are entered, twice, double booked backwards. And so there are always adjustments and changes that have to be made. And so then all of that could just make it more and more cumbersome. And then three, the other one that is a big sort of obstacle or a headwind right now is the lack of, I think, clarity in terms of guidance, frameworks, or standards to help people working in the accounting field understand sort of what the rules are going to be going forward.
Okay, and sort of that leads me into my next question. We're going to switch a little bit and focus on regulation. Where do we stand on guidance from the IRS, FASB, and other regulators, both in the United States and around the world?
So the best way to sort of answer that question is to really sort of, like I started by saying, it's really a patchwork right now, right? Because the IRS has that memo published in 2014 that treats all crypto assets as if they're property for tax purposes. That's it from the IRS, right? There have been conversations and hearings and all the rest, but there has not been, as of right now at least, any updated authoritative guidance out of the IRS yet. Now, on the AICPA side and on the FASB side, I know from conversations that I've had with individuals at the AICPA, for example, there was quite a bit of work going on at that entity to try to put together, frameworks, FAQs, and some non-authoritative guidance to help people working either, again, inside firms or as external advisors to other firms to help them sort of have a baseline or to have some confidence in the treatment of these different assets. But as far as authoritative guidance issued by the FASB or by the IASB, right, for international firms, there is not any authoritative guidance issued as of right now. I can say with a high level of confidence, though, that I'm sure that all of those entities are putting work into this space to try to get something out the door, I'd say in 2019 or 2020 at the latest.
Okay, great. And would you say that the regulators on par are relatively educated about the space and can sort of elucidate the key tenets and takeaways of blockchain and crypto assets? I know, for instance, looking at the SEC, CFTC, and other regulators that look at this industry from a different perspective, we're very impressed with the depth of knowledge that they have, both at senior staff and with their subordinates.
I would say so, yes. I mean, and really, that's really changed in the last 12 to 18 months, really from a regulatory point of view. All of those agencies have really stepped up their game, their knowledge, and their understanding of how blockchain works from a business point of view and how it impacts what they do. And I do think that that's an important point to just keep in mind, that even though it's a fast-moving space, it's a emerging tool and platform, in actually this case, the regulators are up to par, if not even more advanced in their understanding of it than some firms out there.
Okay, that's great to know. Just a couple of final questions, and then we're going to wrap up. Once again, for all the listeners, this is going to be the first in a series of similar webcasts that we're going to be doing next year. And a big part of the webcast is going to focus on really topical issues of the day that pertain to both accounting and blockchain. And we actually have one this week that I'd be remiss if I didn't get Sean's input on. Tether is by far the best known and best capitalized, or so we think, stablecoin that's out there in the marketplace. But it's been subject to rumors for, I would say, over a year at this point, that it doesn't actually have the US dollars in reserve to back every Tether that's in circulation. However, this week, reporting from Bloomberg came out to suggest that, although it wasn't a full audit, that looking at Tether's bank account balances over 4 separate occasions across many months suggests a high likelihood that Tether is actually sufficiently capitalized. So Sean, I'd just like to hear from your point of view. Can you, one, explain the difference between an audit and an attestation, and what we should really make of this Bloomberg report?
Absolutely. So really, a full audit means that it's an audit on the financial statements and an audit of the internal controls of a entity. So in the case of Tether, which I know anybody who's in the accounting focused space of the blockchain ecosystem has heard of Tether and all of the ongoing, challenges that have been facing the company during 2018. But an audit really is is a comprehensive, basically, audit of both the financial statements and the internal controls that actually help the organization take that raw input data out of their systems and turn those into financial statements, right? And there are, analytical procedures done, substantive testing. There's all sorts of external confirmations, physical counts, site visits, all the rest, right? For a full audit, attestation agreement that has a lot more. I believe the best way to say it is flexibility in there, right? A accounting firm can attest to a certain piece of information or a part of a system or certain balances on the books of a company at certain points in time, but it's not as comprehensive usually or as robust as a full audit of a company. And so I do think in the case of Tether, I think this really illustrates and highlights the importance of having accounting firms and practitioners who are both well-versed in blockchain terminology and can actually apply that knowledge to audit and attestation work.
Okay, that's a really great overview. And just final question before I let Sean go. Looking ahead to 2019, aside from getting deeply involved in the Wall Street Blockchain Alliance and everything we're doing in the accounting space, what's your advice for both big four firms, big accounting firms, and also smaller ones, so that they can really be primed and ready to either audit blockchain companies or utilize blockchain technology in their own auditing and accounting functions moving forward?
So I'd say on top of keeping themselves informed as to what we're doing here, I'd say really the AICPA, CPA.com are great resources to actually go to, right? Because those are the hubs basically for the accounting side of things. And I can tell you from firsthand knowledge and experience, they have a lot of very smart people working on these exact same questions. Now, from a more overview point of view, obviously there are fantastic websites out there. IBM has a lot of great resources out there, CoinDesk, Cointelegraph. Basically, the best approach or piece of advice, if I could sum it up, is to basically make sure that every day you are reading at least one article on blockchain overall, and then you are, either thinking about how to apply that article to accounting, or better yet, pull up an article on a accounting firm that is already doing work, be it a white paper, be it a press release, be it just an online story on how that accounting firm is actually using blockchain in their current work right now. The best way to keep yourself up to date and informed. Okay, great. And I'm glad you mentioned AICPA and CPA.com, because we're very privileged to have them both as global strategic partners of the WSBA. So we'll be working with them very closely in the next year on a lot of these key initiatives. Well, that's everything for today. So thank you, Sean, for taking time to speak with us. And I know that we will be you will all be hearing a lot from both Sean and myself, but especially Sean in 2019. And with that, happy holidays, everybody, and speak with you all soon.